Manish Kunwani, Senior Fund Manager at ICICI Prudential AMC. He's our market master, like we promised. Thank you very much, Manish, for joining us. This is a very impressive DII number. What is the sense you are getting in terms of flows? Are they substantially higher? Are they looking like they will continue even in the face of a bit of stock market volatility?
I think so, Lata. See, the point is, if you look at the Indian households balance sheet, we still think that there's too much allocation to physical assets versus financial assets. And as we see the performance of financial assets improving versus physical assets, we do think that Indian households will move their assets from physical to financial. Both long-term debt and equity, we are very positive from a 2 to 3 year perspective. And frankly, we don't see too much return in real estate over the midterm. In terms of prices, obviously transaction volumes can do well. But in terms of prices, we do think that long-term debt and equities are the asset classes to be in for the Indian investor.
I don't know if you all have a gold fund, but are you seeing completely investments in gold drying up? I mean, people who bought at 30,000 should be ruining. Is it completely evaporated, the craze for gold?
Yeah, anecdotally, it does seem that the craze has evaporated.
No numbers.
I don't have recent numbers, but definitely we're not seeing too much of inflows. And again, gold is a bit difficult to value, but both gold and real estate, I think they've done very well from 2009 to 2013. So it'll take time for those gains to consolidate.
Okay. Hi Manish, and thanks so much for joining in. What did you all make of this FI sell figure over the last few days? And do you think that the markets so far have been resilient because the DIs have been pumping in a similar amount of money to offset that? But are you all just from a market point of view, are you increasingly worried about the sell figure from the FIs? And can it take the markets lower?
Well, I do think it's a bit of a challenge for the market that the dollar is very strong. So if you see, Indian rupee has actually outperformed a lot of currencies, both EM and DM, because now we are also seeing that developed market currencies weaken versus the dollar. So the dollar being strong globally typically is a challenge for emerging markets. And to that extent, I guess as long as the DXY or the dollar keeps going up, you're kind of going to see some strain on FI flows. And FIs being such a big segment of the market, obviously that is a challenge. But again, timing FI flows has always been a difficult task. So they change so rapidly that I think we're better off focusing on the fundamentals. And on the fundamentals, the Indian macro outlook looks really great in the sense that we've got a bit of luck as well in terms of the crude prices. So that's really given a nice context to the Indian macro. So as long as that looks fine, I think we should remain invested.
Okay.
But, how are you reading this dollar strength vis-a-vis India? Also because I thought it would affect more investments in debt, not so much investments in equity. We have also been a relative outperformer as a currency vis-a-vis emerging markets. We haven't fallen. I think the dollar index rose about 8%. We have not fallen anything like that, maybe at best 1.5% to 2%. So, two questions really. Do you still expect FI selling to continue because we are not that much of a debt destination? And two, if this were to continue for a couple of days or a week, do you think we could get a serious near-term cut?
So on the prospects of FI flows, as I said, if the dollar keeps getting stronger,
even equities will be hurt? Equity flows?
I think there'll be some challenge on the equity flows as well. Although having said that, if you see the improvement in Indian macro versus the flows this year, frankly the flows are not very great in the sense that we've got, I think, about 13-14 billion this calendar year. If you analyze it, let's say 18 to 20 billion. Now that's a very median kind of figure for the Indian markets. But yeah, I mean, if the dollar gets stronger, you could see some strain of FI flows in the short term. How the market will react? Again, I think what is helping the Indian market also is that we are one of the few emerging market countries to benefit from falling commodity prices. So while EM flows may see a challenge, India's share within EM flows may see an upswing as well, because there are very few countries which benefit from crude falling as much as India does. So, as I said, midterm or short term, it's a bit cloudy in that sense from the foreign perspective. But if we focus on the fundamental, it looks nice enough.
In the last 3 months, the biggest outperformance has come in from the auto space. In your fund, you all are also overweight on the auto sector. Will you continue to maintain that despite the big gains?
Well, we think valuations are not unreasonable even now. As I said earlier, that this is a space which has a combination of structural and cyclical elements. So obviously the cyclical part is playing out today in the sense that with the recovery, the volume should go up. Fuel prices are moderating, but there's also a structural play in the sense these are very good managements, clean balance sheets. They're globalizing a lot, so you're getting a lot of turnover from outside India as well. So in that sense, it's also a structural play. So it's a good intersection between cyclical and structural elements.
Okay. Well, we saw this huge mid-cap outperformance continues to this day, right now. 1% higher, I think, on the mid-caps when the Sensex and the Nifty are flat. Is that going to be a tail that will continue?
So at this point, we think it's a very balanced market. In fact, at the margin, probably large caps look a bit more attractive versus mid-caps. Obviously, the mid-caps have done very fantastic over last 1 year. But today, when I look at relative valuations, frankly, you could make a case that don't bother with mid-cap or large cap. And if you see the liquidity in large caps higher, so as I said, at the margin, probably large caps are looking as interesting, if not more than mid caps.
Okay. Anything specific within the mid-cap space that you will nevertheless stick with? Or do you think basically 60-70% of your funds incrementally will go to large cap?
So we don't have a number, but if you look at segments where we've been fairly comfortable with in the mid-cap space, I guess those would be things like logistics, regional banks, auto ancillaries, and I think there are a lot of good companies in these spaces which tend to grow very structurally. So we're pretty comfortable with those kind of positions. But yeah, I mean, there are certain pockets of mid-cap which seem to have run ahead, a bit ahead of fundamentals.
Okay. So far, Manish, we've seen about a 26% rally on the Nifty if you look at it in 2014. In the next 12 months, how high do you think the Nifty could go? What could be the rough returns that one should expect from the markets now?
We actually don't give out target returns, so I will not be able to comment on that. But as I've said, basically if you look at fundamentals, especially on inflation, for example, we do think there's a very strong case for long duration bonds, because we think inflation will ease off quite a lot. So in that sense, I think if you focus on the fundamentals, on a 2 to 3 year perspective, we think equities would still be probably, along with long-term debt, the best asset class for Indians.
Okay. Manish, I just wanted you to complete that. You said some mid-caps are beginning to look stretched. Would that be the case, or I mean, would they be actually selling there?
Let me nuance that a bit. Basically, what I'm saying is, if you get a long and deep cycle, I still think mid-caps are okay. But what is tending to probably happen is they are factoring in now FY17 numbers and good numbers in FY17. Today they're not looking cheap on FY16.
Okay.
So when you see that, you're kind of discounting a bit further and further into the future, you could make a case that you need to be a bit conservative now.
Okay. No, that's very sage advice, because I think we have been having a heady rally out there and it continues till today. So this advice is most useful. But is there any pocket, like for instance railway stocks, because perhaps work has barely started, or the Ganga cleaning project, or logistics? I mean, we seem to be just scratching the surface on e-commerce or on online buying and selling. Jeff Bezos is here. Does that indicate that there is more to come in terms of those set of stocks, logistics? Is there some pocket where you would still buy in the mid caps?
I don't name a pocket, but see, the point is this, that on a, let's say, price to earnings multiple, obviously a lot of these stocks look expensive. A lot of them have these multiple north of 28, 30, etc., which is not very cheap valuation. But again, if you start viewing it from a market cap perspective, you could probably make a case for some of the mid caps which have a very strong competitive positioning, that the market cap versus the potential looks reasonable. So I don't think it's a case where with a broad brush you can say mid cap is a bubble. I don't think so.
Okay.
But all I'm saying is at this point they seem to be factoring in a strength of economic revival, which may or may not happen. So you just need to calibrate your positions in mid caps with how the cycle plays out. Maybe some of them have factored in a very strong cycle already. And we will keep getting these jerks in between, right? Whether it's a Supreme Court ruling or FI selling. So in that sense, all I'm saying is that basically you just need to be conservative a bit.
Okay. Yeah, sorry.
Okay. Infrastructure as a sector has perplexed a lot of people, because on one hand we know it's perhaps the best way to play, the India story, but on the other hand we haven't seen any reforms or any big ticket investments or revival in capex on the ground which can, give that credence to the rally that we've already seen. So what's the approach on infrastructure, what are your thoughts on infrastructure as a sector in the equity markets?
So first of all, it's a very broad space. So you need to see which segment you want to be, whether it's capital goods, asset owners, logistics, etc. And yeah, it's been perplexing. Also, it's a very leveraged sector. So any delta in macro reflects quite strongly in that sector, and especially with some stocks which are very high debt to equity, etc. But I do think that obviously that's a sector where the government is focused on. That's a sector which has a lot of latent demand. It's a sector which India needs to get done. So it's just a question of pace. So if you get stocks where the pace of improvement is not very aggressive, because let's face it, it's going to take a lot of time, both from the government side and from the private sector side, because if you see the private sector, the deleveraging has not fully happened. And it's not happening in a very fast way, because the issues of some of these leverage companies haven't done well. So I don't think it's going to happen very quickly. So until the private sector balance sheets get repaired, you're not going to see ordering happen, right? So in that sense, it's going to take time. So you need to be in stocks where you could say that this stock has a great competitive positioning. I'm going to be with this stock for 4-5 years. And if you can do that, I still think it's a good space.
You should be very patient.
You need to be.
I'm being warned that we have to wind up the conversation, but I have a couple of questions for you. In the large space, which are your top 3 sectors, say, which is a hierarchy, and where do banks figure? Because that's the question we are getting from our money control viewer. One of the boarders, Varindra Damele, has written from Jhansi. He wants to know if it's a good idea to buy banking stocks up to Diwali.
So if you see our presence in cyclicals, we've generally been overweight on banking, because we do think it's a space which tends to grow structurally across cycles. So we do think banks, again, is a good space to be, obviously, because again, as I said earlier, we think inflation is going to come down, interest rates are going to come down. And while credit growth is a worry right now in the short term, eventually if the economic revival gathers steam, we are going to see growth come back. So that is one sector we do like from a long-term view.
All right, out of time. Thank you very much, Manish, for joining us in. So you expect this DII buy number to continue for some time?
Looks like.
Okay, that's a big positive. That's the biggest takeaway we've got from you. Thank you very much for joining us.
Thanks.
Okay, so that's an important player in the domestic institutional space telling us that the DII buying can continue for some time.